Which brings us to our next and last topic is rebalancing. It's disciplined, systematic rebalancing on highs and lows so we eliminate the need to forecast and predict. We see that short-term market movements are random, right? They're unpredictable. So the only prudent strategy is to buy a little bit and sell a little bit. Rebalancing is not extreme. We're only, keeping, if you're in a 50-50 allocation, we're probably keeping it within a 5% range. So it's not extreme. It's not like we're loading up on stocks and then loading up on bonds another time. That's market timing. So you don't have to predict the future and guess right twice every time. It's a discipline. It's not a prediction. I've had people tell me, John, you're saying you want to buy high and sell low and you're doing this and, isn't that forecasting? Isn't that predicting? Well, if it was based upon my forecast or based upon Scott's forecast or some guy on the TV or even your forecast, and I think that something's going to happen in the market, so I rebalance the portfolio, yeah, that would be the case. But in our case, what we do is we do it for two reasons. Your portfolio is set up with target percentages of all the funds in the portfolio. So when it gets out of those percentage ranges, it gets rebalanced back to those target percentages. The other thing that we do is we do it on a systematic calendar basis. We'll do it in the second and third week after the end of each quarter, except for maybe in January when all the cash comes in December. We'll do it earlier in January. So we do it on a systematic, disciplined basis. So we put this in your investment policy statement. Rebalancing techniques will be used to establish target percentages in each investment, and acceptable deviation from targets will be set. Royal American Financial Advisors will seek to rebalance this portfolio in a low-cost fashion. Before, when they had the ETFs at TD Ameritrade and Charles Schwab and all that stuff, they would charge like $16 to do a trade, to buy and sell. So if we have a buy and a sell and then you have 9 different holdings, all of a sudden it's a couple $100 to rebalance the portfolio? I don't think so. We couldn't do that. But now we can do it all on a no commission basis. So we do it in a low-cost fashion. Rebalancing will be employed to first keep portfolio risk parameters in line. When Royal American Financial Advisors rebalances an account, it sells holdings that are appreciating in value to buy other holdings that may be declining in value. This investment philosophy helps the portfolio to be positioned in various asset types so that when the asset type becomes profitable, the account is positioned to take advantage of the upturn. So discipline always, it's only selling a little bit and buying a little bit. Now everybody knows it's better to buy low and sell high. Everybody knows that. But guess what? Few people want to do it. This is going back to 2016 again. Bear market is here. Expect another big dive, the pro says. Expect another 15% decline. And then that death spiral again. So this was February 11th, 2016, this article came on the exact bottom of the market. The exact bottom. Investors flock to treasuries as yield drops to lowest since 2012. So the benchmark treasury note rallied for its 6th straight day as commodities tumbled and investors dumped equities worldwide. So they sold stocks and they bought bonds, exactly the opposite of what they should have done. Exactly the opposite. So that's why you see those underperformance in those doll bar statistics. So what seasoned investors want to do? We want to rebalance, because this is what happened immediately after the biggest quarterly comeback since 1933. And you guys get this quarterly from us, this rebalancing update. Every time we rebalance, we send out this notice. It's a lesson. It's a good read almost every time. You should read it. But we send out this rebalancing activity notification.